Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy! Alright folks, here we are on Tuesday, June 25th. We're going to take a look at SoFi today. So it's been quite a few months actually since we checked in on SoFi. You know, at that time we had put in this pattern and said maybe we'll make a big move out of this pattern formation here if it continues to play it out. And it actually played it out really, really well in terms of length, of duration, of sort of getting through the entirety of the pattern. I remember back in maybe March and April saying, well, it'll it would wedge out of this formation at sometime in June, and that just seemed forever away at that point in time. And I started to question, will it really persist in this formation for that period of time? And it really sort of did. It slipped out here but came back into it. I almost made a video then, but I held off. It slipped back out again and then tried to inch its way back in, and then right on cue, as it would have intersected this uptrend support with this downtrend resistance, that's when we got this pretty steep sell-off, minus 5% on this day, and then followed that up, minus almost 4%, then minus almost 5%, then ultimately, for now at least, trying to catch some support around this 634 level. So we got a nice hammer down here at 620. Not that it's so nice that it got down to 620, but it put in a nice hammer there on the daily, and then a nice strong day yesterday, up almost 3.5%. Today, giving a bit of that back, but kind of still in motion here. It looks like it's going to be putting in an inside candle here today. So we'll see what that sort of brings about. Now I'm going to get rid of this, at least for now. I'm going to leave the downtrend resistance just because that has been sort of a factor since it kicked off here back in December of 2023. And then it confirmed for the first time here around February, but has persisted since then, much to the bull's chagrin. Now, just to recap on the levels quickly, if or when it leaves this 634, I have 561. The downside here is the next level of strong support. We'll see if something else develops. You see just sort of a cavernous void here in that area. And then to the upside, if it does get through, it would have to get through this downtrend resistance, at least make a valiant effort like we saw here, right? This tried to poke through, really top heavy wick here, brushed off the 745, and then that's when it started its bit of a downturn here. But if it can get through it, 693 at this point would be what 745 was here. So if we get something that looks recovery-ish, 693, 745, and then if it can keep on trucking, looks like there's been sort of development of some stickiness, probably here around like 774, maybe 775 psychological-ish level. But if it can get through that, 826. I won't add any additional levels just yet. We'll see where things play out and how things kind of accumulate over the coming days and weeks, and we'll see how that sort of takes shape. Now, before we flip over to the Think or Swim study and see how things are looking there, I want to do a couple of things. One, let's just hide these and let's take a look at the EMAs really quickly, because this may sort of give us some additional information. So besides that potential bounce or potential hold that it's trying to do over that 634 level that we also have it now coming into play with the 8 EMA. Now, can it get some traction over the 8 EMA? Right now, that's what it's sort of rejecting at the moment. We'll see how that continues to play throughout the rest of the day, but it has an uphill battle here, 671, 684, just to get through those EMAs. And then this 183 MA is actually sort of doing similarly. You see these candles brushing off of it recently, sort of doing a similar thing to the downtrend resistance that we are noting in the chart that we have here, right? So not the exact same spots, the exact same places, but it's kind of continuing to take out some of the highs, the candles that are attempting to do something that looks recovery-ish. I'm reluctant to say to recover. But a couple of other things before we flip over. We do have analyst targets right now. It's quite spread out at this point, the bulk of which are in the hold, which is sort of a little bit of a flimsy status to have, but so it goes. But the average price target right now situated a little over $2 higher, so percentage-wise, quite a big shift. If that were to come into play for any rhyme or reason, not that we put a ton of stock in analyst ratings, but if they do influence any purchases, there you have it. The price or the position cost distribution, pretty interesting at the moment, quite underwater, as you can see. So we'll see how that influences people's decision to buy or cut their losses in the coming days and weeks. If we scroll back just a few days, you see really how underwater it was. I mean, if we look just last Friday, if I have that date right, I think, we see profited shares at market close. I mean, like 1.78%. I mean, even as it stands after close yesterday, 14%. So, that day yesterday, that was about 3.5% to the upside, did a lot of work. But it shows you how condensed some of this distribution is as we get down here. Order flow wise, we do see 4 trading days in a row now. We have more large scale orders coming out than coming in. So take that for what you will. We'll see if that sort of brings anything in the coming days and weeks. And a short interest here, sort of holding steady-ish, though it's on a general uptick from about a year ago. This data is getting quite outdated at this point. This is at the end of May, and we're almost at the end of June, so it'd be nice if we could get some refresh on this quicker. But the interesting thing here is even if the short interest itself is staying relatively steady, the days to cover have grown quite a bit. I mean, a bit over 6 days to cover is quite significant. So the shorts are getting in there and they're holding on. So we'll see again sort of what role that plays as things, as we question whether we do get anything resembling a bounce here off of this 634-ish level, right? It's put up a good fight so far, but we'll see. Are the buyers there, and are the buyers there in enough mass to really push through? And if it were to attempt this downtrend resistance in the coming days, it would get mighty near that 693. Obviously, if it persists for a while, then we run the risk of putting in another descending wedge formation here, but that wouldn't play out for almost a month. Now, on the think or swim side of things, we see here, on this oscillator down here, we see the phase sort of tipping back toward the bearish phase again today as it's sort of catching some resistance off of this wave cloud. Ideally here, the ideal situation in a very unideal situation overall would be, sorry, had a little glitch there. What I was saying was a somewhat ideal situation in a very otherwise non-ideal situation, meaning all of this selling pressure over many, many weeks and months, would be if it could at least take a bounce off of this lower bound of the channel, right? Similarly to that 634 level that we were talking about, that just happens to be around where the lower bound of the channel is on this setup as well. If it could at least shove its way back toward the mid-range of the channel, that bright blue line, right now situated at 671. So that would, again, 671 would put it right around here price-wise. And so if it were able to do that in the coming days, it could just within a week or so, a week or two, be able to test this downtrend resistance, because regardless of any of these levels, 634, 693, 5, whatever it was, 561, all of that's sort of secondary to the downtrend resistance. The downtrend resistance is the ruler of the day at the moment, even if it's farther away from it. Any sort of bullish momentum can get completely rejected and suppressed and thrown out the window because we have this downtrend resistance kind of looming over everything, right? It's like the dark cloud over it all. So, for this setup, the way that the Thinkorswim setup is situated, what we would want to see is at least, holding this lower bound of the channel, which it has done so far, meaning it doesn't get kicked out of the lower bound of the channel, which is super sad. And when it does catch support there on the lower bound of the channel, at least having the strength still, like we saw over here, to come back up, make a valiant effort, test the mid-range of the channel. Maybe it still rejects it. Maybe it still ultimately pushes back to the lower bound of the channel, which, yes, long-term is just lower and lower and lower price points. But once you lose the strength for the price to even come back and test the mid-range of the channel, that's when you know there could be some more severe and longer-lived pain in sight, potentially, right? It's always a potential. Catalysts and things like this can really throw stocks such as SoFi a kilter and sort of shove the chart to the background. But short of that, we would really want to at least see that there's enough strength to hold the lower bound of the channel, and following up from that, test the mid-range of the channel. So this will be an important week, I think, to see if it's going to be able to do that, or if it's going to start to catch resistance off of this wave cloud, which may be not so great of a sign for the bulls. TTM squeeze indicator wise, we had a brief trigger and fire here, right? We had a lengthier one here, trigger, fire, and then nothing happened. It's still mid-range of the channel, and then you had the re-trigger and the refire, and that's when we got the much bigger move that we noted also here. That's where that was wedging out, and that's where we got the push down to the lower bound of the channel. So playing out that move still, we'll see if it's able to peak out here, in other words, reach a peak on the bearish momentum on the histogram here, and be able to sort of slowly but surely chip away at killing off that bearish momentum, and maybe at least flatline it again back here at the mid-range of the channel. But we'll see what the days and weeks ahead bring. But here are the slew of levels that we have right now, stretching from mid-5s up to just over 10. All right, folks, I hope that your trading week is off to a good start, and as always, I appreciate you watching, and I will see you in the next video.